Welcome to OrangeQuant.com. I'm Dennis Hudson. The whole point of this particular video is to show you the kinds of tools that we're using from the FLIR 2 ebook, which is below. And among those tools are tau, iota, synthetic trend lines, and the H205 indicator, among others, but those are the main ones that we've been using for these remarkable S&P 500 forecasts that we've been making. Now obviously I won't be giving you the details of how to construct these various indicators, but I want you to understand how they work and why they work. It is child's play to construct them, and you can do that with the FLIR 2 ebook. Now first off, I want to talk about synthetic trend lines. And as you can see here on the chart right here, let me get my pointer. Okay, as you can see on the chart, we have these two heavy green lines. Those are synthetic trend lines. So the first question is, what's the difference between an ordinary trend line and a synthetic trend line? And by the way, I'm not knocking the traditional use of trend lines and how they're constructed. A lot of excellent traders use those constructions for trend lines, and they're very successful. But this has a special application. And here's the difference. Your usual traditional trend line simply defines a support or resistance level. Once that support or resistance level is firmly broken, then you know to enter or exit a trade according to your preference, long or short. In other words, with a traditional trend line, price will move above or below the trend line, and you wait for it to cross before you reverse your trade. A synthetic trend line, which I have developed, it's a type of algorithm that I've developed, and it's very simple. A 6-year-old could do this. Well, maybe an 8-year-old. And what it is describing the mean path of price rather than support or resistance. In other words, and I'm going to draw something here so you see what I mean. In other words, we see prices right now here. At this point, this looks like an ordinary trend line. But what develops is that price will oscillate above and below this trend line, and your mean path is described by that green trend line itself. Let me get rid of those drawings, and now I'm going to show you the example of this. This is the S&P 500, and you'll notice that we have these 4 bars going up right here. Now I'm going to pop up another illustration, another chart, and you will see that the price begins to oscillate below and starts up towards to cross it again. Here's that other chart. There are your 4 bars that we saw going up, and now you see price oscillating down below. Price at this point, and this would be this is Saturday, the 19th of December. And what we have is prices oscillated below that mean path, and at this point it's about to start back up. So that's the value of the synthetic. You know that it's going to return here. Another feature of the synthetic is that it gives you, it has a time element built into it, whereas your traditional trend line has no time element built into it. You don't know how long it's going to last before a price breaks one way or the other in a permanent sort of way. Another important feature of synthetics is that they change. You're able to construct them well in advance of having the nodes for construction. In other words, at this point, based on the traditional method of constructing trend lines, you could not construct this orange trend line right here, nor could you construct this pink trend line. And the significance of those is explained in the first video on this page. or maybe as time evolves that video won't be available, so maybe I should explain it right now. These are alternate paths, alternate mean paths of price, and overall we will know Monday or Tuesday which of these paths it's probably going to follow. In any case, my point is you cannot construct those two additional trend lines using traditional methods, but you can construct them using the synthetic trend line methods. Now, another tool which we mention often in our forecasting and which we use aside from these synthetic trend lines is something called the H205 indicator, which is another type of indicator that's very easy to set up. It's in the FLIR 2 book. You can set it up using coding, or you can actually do it in a spreadsheet if you prefer. And I do provide the Thinkorswim code for it, which I developed. You'll need to convert that into MT4 or MQL4 if you're using it for your particular platform outside of Thinkorswim. Now, the H205 indicator, which stands for the Hudson second order oscillator, is, and here's the H205 again, and what it's measuring is very tiny differences between a pair of plots along price. The H205 here, I can tell you, is this darker line. It's actually a green line here in the upper part of the chart, and the lower part of the chart is the histograph of the differences between that and a moving average, and you could actually pick just about any moving average you like and you'd get a comparable result. But of course you'd need to know what the H205 represents, what it is measuring, and it's measuring some factors in price which I extracted over the course of time, and then I realized the significance of its relationship to certain moving averages, and that's plotted down here. What we then do in the histograph, after we have that, there's a lot of significance in the histograph, and we read a lot into it because it crosses the zero line here, this dark line. That has special significance, but only sometimes does it have special significance. You have to know how to interpret this. Mainly, with the H205, what I do is construct trend lines on the H205. As you can see, these red lines running along, and where they intersect is often a very significant inflection point. I also use the H205 to confirm information generated by the synthetic trend lines. So, for example, we knew from the synthetics that this point here marked a significant change because it was confirmed by the H205 trend line crosses down below. As a third confirmation of inflection points, I also use tau and iota values, which is a simple table of values, and from the FLIR 2 book, ebook, you can plug those in and identify inflection points well in advance of their occurrence. Again, it's child's play, really.